I'm George Ratiu, Manager of Economic Research with Realtor.com. March is here, and we are seeing signs of spring renewal, warmer weather, and the promise of a post-pandemic reality. However, dark clouds emerged in the last 2 weeks in the wake of Russia's attacks on Ukraine, which led to loss of lives, destruction of cities, and over 1 million people fleeing for the safety of neighboring European countries. The conflict is causing uncertainty in the US economy still on a growing trajectory. Highlighting the growth, the ISM Manufacturing Index rose in February, the first gain in 4 months as factory orders rebounded. The Service Index slid, however. Echoing the trend, the Commerce Department's report on new orders for US-made goods showed a higher than expected advance in January. It's worth noting that we could see supply constraints again due to the Russian invasion of Ukraine, as the two nations produce critical materials for semiconductors. On the employment front, February's numbers exceeded market expectations as the pace of hiring picked up. The headline unemployment rate dropped near pre-pandemic levels. Adding to the good news, initial jobless claims declined to a 2-month low in the last week of February, well into pre-pandemic territory. With 11 million open jobs and not enough applicants, companies are wary of laying off employees. These trends were reflected in the Fed's Beige Book. The report showed the economic activity increased at a moderate to modest pace in the first 2 months of the year. The report also indicated that inflation continues speeding up, with firms expecting more price increases in the next months. In turn, Federal Reserve Chairman Powell mentioned in Capitol Hill testimony that the central bank intends to raise the funds rate by 25 basis points at its mid-March meeting. On the real estate front, markets are experiencing an early start to the spring season, with solid demand driving inventory lower and pushing prices to new record highs. Realtor.com's February data reveals that as buyers try to get ahead of rising rates, homes are selling at a fast pace and listing prices surpassed last year's July seasonal high, closing in on $400,000. The shift signals a competitive early spring season for home buyers. Our weekly data provide a glimmer of hope, however. The number of newly listed homes picked up in the last 2 weeks of February, hinting that more sellers are planning to enter the market in the next 2 months. Fueling this activity, mortgage rates dropped for the second consecutive week, offering buyers a reprieve from the January surge. The decline in rates was also welcomed by homeowners seeking to refinance. Stay well this week, enjoy time with family, and keep an eye on the latest data at our website and Twitter feed.